Question number 5 for the paper 21, May-June 2020. Okay. MPT Limited prepare its financial statement to 30th April each year. The company retained earnings at 1st May 2019 were 14,000. The general reserve was 35,000. During the year end, 30th April 2020, the following took place. The company made a profit for the year of 28,000 after charging debenture interest. A transfer of 5,000 was made to the general reserve. A dividend of 4,500 was paid. No other dividend were payable for the year. Okay, next. MPT Limited provide the following. So this is the asset, liability, asset. This one is under the trade receivable. It's considered asset section. This one is non-current liability. This one is the equity section. So now the question saying that calculate the retained earning. Okay, if we use the T account, I'm using the T account first. Retain earning date, detail, and dollar sign. Okay. Beginning of the year 2019. Okay, there is amount of balance brought down. Balance brought down in the credit side because this is an equity section. Okay, retained earning is under equity section. So this during the year the transaction took place, the company made profit for the year of 28,000 after charging debenture interest. That means on this year 2020 April 30th, this is a profit for the year that they earn. Okay, and the amount is after charge, that means it's a final already. Okay, the next one. During the year, a transfer of 5,000 was made to the, okay, the key word in here is they say that to the general reserve. Okay, so in this case, retained earning had to be debited. Okay, to the general reserve. Okay, 5,000. Now what I need you to take note is that in case the question change it to a transfer of 5,000 was made from. If the word change it to the from the general reserve, you will have the general reserve amount in this credit side. So take notes that in your exam, whether the question saying that to or from. Okay, now let's continue. A dividend of 4,500 was paid. Dividend paid is in the debit side because it reduces your amount in the retained earning. But only take notes that only the amount paid you will record in the debit side. If it's just a propose, don't put into it. Okay, here dividend paid. Dividend paid. Okay, so next is 4,500. Okay, now next is that there's anything else? The question, okay, no more. So we can start to calculate the balance carried out. So let's calculate the balance carried out. Okay, so credit side more than the debit, that means our balance carried out will be in the debit side. So take the credit minus. So 32,500. So 2020, May 1st, balance brought down. Okay, so this is the amount that we have. Okay, for this question, they say calculate. Since this is a T account, if you want to use the calculation method, so what you can do is, now I'm showing you the calculation method. So you have to write what's the information they're given in here. They say that retain earning at 30th April 2020. Okay, start with the balance brought down first. So you can say that balance at 1st May 2019. Okay, the amount is 14,000. Okay, now during the year, what is the you're going to add? You're going to add the profit for the year because increase your retained earning 28,000. So you add these two first. After that, let's transfer to general reserve. Okay, not enough space. I need to add a little bit. Okay, put how much the transfer? 5,000. Okay, and then during the year, there is a payment for the dividend. Okay, which is 4,005. So add these two amounts. So basically, this is a more to a calculation method. So calculation method, normally we will start with the amount, which is the add first. After that, we less. So that is how we prepare the calculation method. Start with the add, after that, less. So now here we put balance at 30th April 2020. So that is how we calculate retained earning. Calculation method, which is a segment method. Ledger method, which is T account method. So let's continue. Okay. They asked to prepare the statement of financial position. They give us a 3 column. See what are the items we have first. We put in the section non-current asset. This is the first section we normally have. And then current asset. And then after that, because this is a company, we put equity and liability because the company account. So with the equity section, after that, non-current liability, and then last is a current liability. So all the section we put in, now we go and see what are the items that we have here. Okay, we go, let's check. Okay, I bring down this far into there so that easier for me to do. Okay. So this one, move it to here first. Okay, give me a minute. Okay. So this is all the information that we have. Okay, let's see what are the non-current assets that we have. Okay. Since they're given us the book value only. So in this case, actually, we don't really need 3 columns. So feature and equipment, because it's this one, they don't have the provision. So basically, no need, not really need 3 columns. Feature and equipment, motor vehicle. Okay, so put in the amount 152,000, and then motor vehicle 60,400. So add these two amounts. Okay, so we put in the subtotal because no other asset already. So this is the extra. We just take it out. Okay, current asset. let's see what are the current asset. Inventory, trade receivable, and don't forget this one, provision, also had to part of it. So here we put inventory, and then after that, trade receivable. This is like a formula, so you must remember. And your trade receivable must minus the provision for doubtful debt. They are always together. This is the one pair. Okay, this is always one pair together. So inventory. Okay, here inventory is 30,320, 330. Okay, now we can use the first column because we want to show the net amount. So trade receivables, as I said before, in case that is too many lines, you feel confused, you better draw the line in between so that you can see the number more clearly. Okay, trade receivable amount is 31,500. Provision for doubtful debt 630. Okay, now take the net amount, put into the second column. Okay, and then add these two together. So you get the subtotal, total asset. So this is our total asset. Accounting equation concept, asset equal capital plus the liability. Okay, now equity. Equity, we have the ordinary share. Ordinary share capital. So this is one of the items. Other than that, retain earning. Other than that, general reserve. So this is something that you need to memorize. What is the section under the equity section? Now, capital, 150,000. And retain earning, if we get this one wrong, then automatically we won't able to balance the account. Okay, general reserve. Okay, general reserve beginning of the year. They had the balance 35,000. So this is the beginning of the year, general reserve. And during the year, there is a transfer of 5,000. So basically, this one is total 40,000. So you can show your working beside here, 35,000 plus 5,000. So total general reserve is 40,000. Try to show your working how you get the number beside your detail. Okay, now we have done the equity section. The next one, non-current liability. Okay, non-current liability, which is the liability we need to pay after a year. So here, this one, 5% debenture repayable. So this is more than, from the year, you know that this one, repayable in 2025. Compared to your financial year you prepare, this is more than 1 year. So this is the non-current liability. So you put 5% debenture. Okay, I noticed sometime the student will put in, calculate the percentage and put into here. This one is just to indicate to you that the interest charge on debenture is 5%. But your non-current liability, you must take the principal amount, 20,000. So don't forget it. This is a common mistake happen. Okay, don't go and take calculator to times 5%. Take notes. This is not take principal amount. Okay, now next, current liability. Current liability is bank overdraft. Bank overdraft. And then trade payable. Okay, so these two items. So bank overdraft, let's see one more time, the line. Just make sure that the item is correct. Okay, bank overdraft is 6,200. So 6,200. And trade payable is 24,900. So we add the total, see whether we can get it balanced. If get balanced, that means our account should be fine. Okay, so the amount are the same. Same to the total asset, means that our account should be no problem. Okay, now let's move on. Okay, let's see what else the question they ask. Okay, now we put it back the file first. Okay. Okay, now let's continue the next ones. Okay. The director of MPT Limited are considering using general reserve to repay the bank overdraft. State why it is not appropriate to use the general reserve to repay the bank overdraft. Okay. Sometimes, while our income statement, the profit for the year in the income statement is not equal to cash in bank. Why? Because in the income statement, they include the cash item, payment item, and also non-cash payment item, such as, for example, the common is a depreciation, which is we do depreciation because accounting requirement. So that's why if we transfer the general reserve is transferred from income, from the retained earning. So means that it will have the same problem. The balance in general reserve is not equal or same to cash balance. So there is a reason that it's not suitable to use it to pay the bank overdraft, because it may not be the money, the actual money that you have. Okay, let's continue. D. Calculate the return on the capital employed for the year 2020, April 30th. And then the calculation should be correct to 2 decimal and should be based on the closing capital employed. Closing capital employed means that they want us to take these two amounts as a calculation. Okay, let's see. Formula first, ROCE. ROCE, the formula is profit before interest. Okay, and then divide equity plus non-current liability. Okay. And then times the 100%. So now we based on the formula that we have. Profit before interest. The question on top given to us, they say that the company made profit for the year of 28,000 after charging the debenture interest. This indicate to us this is after debenture interest. We have to change before interest. So how are we going to calculate? We take 28,000 plus how much the interest, debenture interest. The debenture interest is here. 5% debenture, 20,000. So we have to plus back plus 20,000 times 5%. Okay. Then after that, divide by the equity. How much the equity? They say want to use a closing balance. So this amount, 222,500 plus 20,000. Okay, so there is the amount that we have. So we take after that times 100%. So this is the working we should get. Now use the calculator. Let's see what is the amount that we have. So I calculate first 28,000 plus 20,000 times 5%. So we get 29,000. So this one is 29,000 divide. Okay. For the equity this non-current as liability plus equity. Okay, plus 20,000. So we get 2425. So here 242500. And then times 100%. So now continue. 2,000. Okay, let me count on here. 2900 divide 242500 and then times 100%. So we get 11 point. Okay, the question say 2 decimal place. So we have to see 111.96. We have to round up to 2 decimal. So this is the answer that we get. Okay, now let's move on, see what else the question they ask. Okay, the question they say that the director are considering increase the dividend in 2021 as a way of increasing the return on capital employed. Advise the director how the return on capital employed can be increased. Justify your answer by comment both profit and the capital employed. So here, the question, the reason is they want to increase the return on ROCE because they are thinking to increase the dividend in the next year. Okay. Now, advise director how the return can be increased. First of all, think about this statement first. Number one, how can ROCE increase? This is what we want to answer first. Okay. How we want to increase based on the formula? We see the formula first. Profit before interest divided by capital. Okay, and then times 100%. So if we're using the mathematical concept to do the calculation, okay, let me put it somewhere here. This is a profit, okay, and then this is the capital employed. Okay, this capital employed is equal to equity plus non-current liability. If we want to make this ROCE increase, we must make the profit increase. Okay, that is one of the way. Then this ROCE will increase. Or another way is that reduce this one, capital employed, ROCE will increase. And this reduction actually is talking about the use of the capital employed, use the resources, use the business resources more efficient. Means that we use a lesser money spent on it to get maximize use of the asset in the company or the liability. That is called use resources more efficient. You can reduce the capital employed. So there is a two-way that can cause the ROCE increase. So now we write down the answer for it here. Increase. Let me put it in the sentence. By increasing profit for the year and by increasing the profit for the year, ROCE can increase. Can increase. Can increase. Other than that, the company also can increase and decrease, can decrease the capital employed by using resources more efficient, which is that $1 can earn a lot of money. That is called efficient. Okay, now next, not yet finished the question. The total mark they allocate is 5 marks. So now next is that justify your answer by comment both profit and capital employed. So these two, we already comment on it. Okay, how we want to increase how we say that profit can increase, how we want to increase the profit. So now B, how to increase profit. So this is a question that we have to ask ourselves. Okay, you can say that the company or the director can plan more sales activity to promote the product, so that the profit can increase. Other than that, what the director can do, they also can, they should also control expenses so that profit can increase when expenses decrease. So this is about the increase in the profit. Okay, now next, okay, number C, the third point that we should talk. We already talked how to increase, then now we need to talk about how to reduce the capital employed. So how to reduce capital, how to reduce the capital employed. Okay, if you see the component of the capital employed, this one, equity. Equity got 3 in this question. Ordinary share, general reserve, retained earning. So if we want to increase the dividend, one of the way is we can use this one and this one to pay the dividend. Okay, so use this one to pay the dividend, then we can reduce this equity, reduce this capital employed, and then ROCE will increase. So now we put in by paying dividend to general reserve or retained earning, the equity will decrease. Okay. Therefore, the director can consider increasing dividend in 2021 as a way of increasing return on capital employed. Okay, so this one, let me add some more point for it. Okay, by paying dividend through general reserve or retained earning, the equity will decrease. Okay, and capital employed will decrease. So next sentence, therefore the director can consider increased dividend in 2021 as a way of increasing the capital as a way of capital return on return on capital employed, which is ROCE. So this is the answer we can use. Now let's move on. This question they say advise the director how return on capital employed can be increased. So there we say these two can cause the increase where the ROC can increase, profit increase. When profit increase, by increasing the profit. And then another way is that decrease the capital employed. So these two ways will help to increase the ROC. Next is that we have to answer how to increase the profit. Then next, how to reduce the capital employed. Okay, now here is that your answer by commenting by both profit. So here when we saw that the profit can be increased, okay, so this one is the sales activity, the profit will increase, and then okay, so this is the idea that we can put in how to increase the profit, how to reduce the capital employed. Okay, let's see, still got any more? Okay, that's all for the question 5. Okay,